What's up, everyone? Happy Aloha Friday. What's up,
Hi,
Chad?
Skyler.
Hey,
How
buddy. Hey, nice
you
hat. What
doing,
is
buddy?
what is that hat?
This is Artificial Turf Supply, buddy. Local Carlsbad owned turf company.
Nice. I'm
My buddy,
sure.
my buddy Dave owns it. So anybody out there looking for turf, give him a call.
I'm sure it's pretty welcomed right now too with the heat and everything. You probably want artificial turf in
A
your
lot of
in your
people
yard.
have actually. He said it's been blowing up, and a lot of people are going with the artificial turf route. Obviously, less water, less care, makes it makes it easy. He's actually like, I think he hired three more people in this last 2 weeks, so
Oh
he's
wow.
he's cranking. So
Nice.
just trying to show my support, buddy.
That's good, man. That's
Local
good.
business of the week.
Yeah, there you go. Perfect.
Yeah.
Yeah, man. So yesterday I put out a question on Facebook, and it was geared towards if anyone has any questions, regarding finances and financial planning and investments and everything else like that. Um, let us know. And I got a couple messages, just private messages, because obviously people are a little apprehensive to post personal things on Facebook when it comes to finances.
Yeah.
So I figured we could highlight those and then dive into some other things, I guess related to those questions and see what we can come up with. So,
Cool. What'd you get?
all
What
right,
do
we
you
got
got?
one that was if I'm a 1099 employee, how do I put more away than 6,000 into my IRA or my Roth? So 1099 employees are basically, contracted workers. And there's some good and some bad, regarding 1099 employees. One thing is you're not really covered by a, you're not under, the employer, so to speak. So you don't get the benefits, you don't get, you know, tax deductible contributions and retirement plans, a lot of other things, regarding that kind of thing. The cool thing though is that you're able to go and work for multiple people, right? You can do whatever you want because you're a contracted worker. So I'm sure in your business, right? Like you agents are 1099s.
Everybody's a 1099 independent contractor, and that plays pretty heavily into your taxes, which I know. Hi, Jeff Starkey. That's my tax guy. Anyways, yeah, you definitely have to plan for taxes. Have, as we discussed before, retirement accounts, 401ks, SEP, IRAs, whatever, set up not only for your ability to save for your future, but it's 100% tax deductible. Where guys like me are always looking for the next write-off. So yeah, that's huge.
Yeah. And to that point, depending on how much you make and all that kind of stuff, having a certain entity may or may not be more beneficial than being a 1099 employee and taking, um, just a check and then putting it into your account like a sole proprietor. So,
Right.
like if you're if you're an S corp or any sort of corporation, LLC, S corp, C corp, whatever, there's tax benefits to that. And one of the cool tax benefits is that you're allowed to put a lot of money into a retirement plan, and that helps reduce the amount that you have to pay in taxes. So, depending on what size business you have and how much the business makes and how many employees you have and everything else like that, like it can be pretty beneficial to set up a plan. Also, pretty cool. The at the end of last year, the Secure Act, it was passed by Congress, which was like an overhaul to retirement planning and retirement plans for businesses. They had a section in the new law that basically said if you establish a plan, the year in which you establish it, the year afterwards, and the year after that, so for 3 years, you get a tax credit for the business. and it's for administration expenses and everything else, and it's up to $5,000. So if you're a, if you're a retirement, or if you're a business owner and you have you're making a lot of money and you don't see a lot of that go into either savings or retirement plan, other than maybe your 6,000 and do an IRA, you could potentially establish, 401k or some other sort of retirement plan, have that be tax deductible from your personal amount that you make, so your W-2 wages, and then there's also a deduction that you can get from the business. So it's multifaceted, and then you also get a tax credit. So there's a lot of cool things, with regard to retirement plans.
I think that's super important for 1099 independent contractors, I should say. My tax guy was hounding me for years to set up an S corp, and I was like, I'm fine. I don't need to set up an S corp. And he's like, dude, you need to set up an S corp. So he set up an S corp at the beginning of last year. Obviously, I pay myself out of my own corporation. It's just a way. It's so much more organized. It's so much more streamlined. And it really does benefit you, especially if you're making over a certain amount of money. If you're new into the business, or you're making, let's say less than $100,000, maybe you're okay to stay as a sole prop. Once you break a certain threshold, year after year, it's definitely worth looking into. I've talked to other agents who were on the same boat as me, and they're like, oh, no, I'm not going to do an S corp. And then I'm like, you should probably talk to the CPA. And they're like, okay, I did an S corp. So now a lot of people that I've talked to, over the years have done it or are doing it. It's just a much smarter way to manage tax liability and manage investments. Like you said, 401ks, SEP, IRAs, you can just automatically have money go from a corporation to a SEP or to a Roth or to a 401k. And again, as we mentioned, it's tax deductible. So huge. For me, it's been huge.
Yeah.
And, I probably saved, God, I don't know. I saved quite a bit last year. I'll save quite a bit this year. But on top of that, if you pay as you go, like I'm doing with an estimated tax on top of that, and you do your 401k, your SEP, at the end of the year, you don't owe a giant chunk of money. And that's where I think people run into trouble.
Mm-hmm.
As 1099 independent contractors, is they just end of the year, they made a certain amount of money and they're like, what? I owe $36,000 to the U.S. government? And sometimes people don't have the 36 grand, or if they do, that's all the money they have, for example. So that'll get you in the hot water. So it's a good idea, and I'm happy you brought that up.
Yeah, I'm working with a business owner couple right now. They paid roughly $90,000 in taxes last year. Yeah. And they got a business, and I think just through all the planning and stuff that we're doing, we're going to set up a retirement plan, a 401k, and it's going to reduce their tax liability substantially.
Right. And they're paying themselves. I mean, the money's going back to you at the end, it's for you for later instead of to the government. So
yeah.
To me, it's a win-win. It doesn't make any sense not to.
Yes.
Right?
Yeah, exactly. So I think a reason why people end up not wanting to do this S corp is because it costs money, right? Like that's the only reason.
It's not much though.
Yeah, it's like $800 a year or whatever.
Yeah. Are you able to do that for people if they're interested? Can you?
No, I don't do taxes. I don't do like entity.
But if they want to set up a 401k or a SEP or a Roth.
Yeah, for sure. Yeah, I can help them out with that, or at least do like an analysis to see like, which one makes the most sense. Because sometimes people will say like, I want to max out, the amount that I can put away. But then in reality, when I take a look at everything and when we do our analysis, it's like, well, you want to, but it probably doesn't make the most sense. So why don't we see if we can, get as much as we can, but not the max. So, but yeah, it's just, the cost I think is really something that hinders a lot of people. But at the end of the day, again, to your point, Chad, it's very, very organized. And if you have, accountant or a bookkeeper or something to really automate that for you, that you just outsource, dude, it just makes things so much easier.
That's what I do. It's worth it. It costs a little bit of money, but all the money you're paying to do all of that is all tax deductible.
Yeah.
So it's like
as a business expense.
Yeah, it's an expense. So I mean, it's not the end of the world, and I think people will find out that it's well worth it once you kind of get the hang of it and understand how it works. it's very beneficial to anybody that's a 1099 independent contractor. So on the flip side of that, let's talk about W-2 employees
Mm-hmm.
for a minute, because a lot of people that are employees of a company, have some 401k set up that the employer matches, or they have some sort of retirement fund that the employer matches. Their taxes get taken out ahead of time. Oftentimes they get a check back at the end of the year. What would you advise those people to be doing, either with their return, if they're getting a return, or with the retirement funds that they're paying into? And I mean, I haven't been in that world for a long time, so I
Sure.
don't know what it's like. But you probably help a lot of people that deal with that, right?
Yeah. It's it would depend. So a lot of time, let me just back up. A lot of times people have the ability to save inside a retirement plan at their company that they work at.
Right.
We had a conversation last week with someone who said they maxed out their 401k for this year. And so they're trying to figure out, okay, where do I actually, that was a question that I got in the messages, which was something that we talked about last week. But anyway, essentially, if you're maxing out your 401k, there are other ways in which you can save for retirement, but it's not nearly as much as you think you can. Generally speaking, there's limits on the amount that you can put away, because the IRS says you can't like overfund retirement accounts. You know what I mean?
Right.
And so if you overfund your retirement accounts between, so say husband and wife, maxing out their 401ks, well, if they make over a certain amount, then they can't deduct any more dollars that are going into another plan,
Okay.
which may or may not be a good thing, because if you can't deduct money going into like an IRA, later those dollars can be converted into a Roth, and there won't be any tax consequences, because it's already tax that you paid on those contributions, right?
Mm-hmm.
Because it's non-deductible. So there's different ways in which you can fund other retirement accounts. But one of the things that I really like to say is, okay, you're maxing out your 401k, things seem to be going well. As far as savings is concerned, what are your goals, I guess, in the next 3, 6, 12 months, right? Because a lot of times I'll find that, oh yeah, like we want to go on a trip, or we want to do this, or we want to do that. So having a plan, like when you end up getting extra dollars that you have, that you want to save but you just can't, so to speak, maybe putting those dollars more towards your mortgage, right? Like that's awesome for people that can pay off their house or their debt sooner. You know what I mean? Like
People
there's
that can afford to do so.
yeah, so that's what I'm saying. Like if you end up having like a lot of money that's coming in, and you're maxing out your retirement plans, we'll find a way to make that money work for you. you know don't necessarily just like put it into a stock account or a brokerage account at Fidelity or something, TD Ameritrade, and then expecting it to to just really grow like over the long term. It will, it should, based off of whatever whatever your asset allocation is. But yeah, I think that a lot of times you have to end up kind of reorganizing your priorities in your financial life, and figuring out how you can maximize what you have coming in. So
Awesome.
does that answer your question?
Yeah, it does.
Yeah.
It does. I think we
Okay.
even covered some stuff that I wasn't even anticipating covering, but I think people do want to know about, or should want to know about, if
Yeah.
they don't.
Yeah.
So yeah, that helps a lot.
Um, Last question that I got was, if I have a list of investments in my account, which one do I choose?
What was the question?
If I have a list of investments available in my account, which one do I choose? Because a lot of times, like,
That's all you.
well, it's so people have, when they have a 401k or some sort of company retirement plan like that, if it's not, at if it's not like self-directed like an IRA or a SEP IRA, that kind of thing, there's generally a menu, like an investment menu, and you're only allowed to invest in whatever is available to you. And most of the time people say, oh, like I have a target date fund, right? So I'm going to retire in 2045. So I'm just going to pick that, the Fidelity target date 2045 fund. That's really, it's really good for, it's a good strategy for people who kind of just want to set it and forget it, right? Like they're just like, I just don't even know too much about it. I'm just going to just sign up for this thing. And hopefully, when I retire, it'll be there and I'll have money in it. The flip side of that is that those sorts of investments don't necessarily reflect what's happening and the changes that are happening in the economy.
Mm-hmm.
So a lot of times what I like to do is I like to go in and see the different funds that are available and then do an analysis on them and show people, hey, like you can invest in these 3 things or these 4 things or whatever, and based off of your risk tolerance, you have a better chance of getting to where you need to be later rather than just being in this one target date fund. So it's I think at the end of the day, if you don't want to do a lot of research and you don't have time and you just want to be like, I don't really care too much about it, I just want to know that it's invested and it's there, target dates are a great solution. If you want to be more, geeky and learn more about it and stuff, definitely having more of a diversified portfolio and breaking the funds up inside of that account could potentially help you get to your goals with less risk. So that's all I got for that one.
Cool.
Yeah.
That was a good answer. That was thorough.
Yeah.
I like it.
I could literally talk for an hour on how to diversify your 401k. Like,
right.
it's just, there's so much information on it, and I love
We'll be talking about mine this week. And I think next week we're going to try to get, if everybody's still watching, we're going to get a tax guy and talk a little bit more about some of this stuff, because to me it's interesting and it's super beneficial to everybody out there, whether you're W-2, 1099, whether you have a little bit of money, a lot of money. I think it's a good topic to cover for anybody out there, unless you're on the streets and you don't care, then maybe you don't care. But I think pretty much anybody else that has a roof over their head should care about these things, in my opinion. So
yeah, I mean, another really interesting topic too is, I mean, I like to say we are at our lowest tax rates right now that I think we will be in, at least for the next 20, 30, 40 years.
don't say
So
that.
if you can figure out a way in which you can maximize the tax benefits today for
Right.
later, it's going to be so much more beneficial for you.
Right.
Like I've been doing a lot of conversation. I've been having a lot of conversations with people about Roth conversions. So converting your 401k or your IRA into a Roth, so that once you retire, you don't have to take the money out, and they're called required minimum distributions. You don't have to take the money out, and it's tax-free income later. So there's all sorts of tips and tricks and stuff. But yeah, I would say consider the tax table today, and make some moves if you can.
Right.
So
Right on. Well, good stuff today, man. Anything else before we jump off? Or you?
yeah,
Good?
you hurt yourself. What happened yesterday, Mr.?
Just a little ankle injury, bud. We got
Yeah.
some. Gonna be on these guys for a couple weeks. So yeah.
I wish I knew. I wish I
All
knew.
the ligaments in my ankle, and they said it's a grade 3.
Ooh, out of what? 4?
Out of 3. 3 out of 3.
Oh wow.
It was a good one.
Yeah.
So yeah.
Sorry, buddy. And I honestly wish I could give you a tennis or relate it somehow to someone in tennis, but I don't know any tennis players. So.
You know what? It was exactly like Tony Finau when there was a video of him celebrating. I can't remember what it was. My buddy actually sent it to me this morning. But so Tony Finau, let me see when that was. At the Masters in 2018, he's celebrating at this par 3, and he's running backwards, and you see his ankle just roll and pop out of the socket, and then he has to grab it and pop it back in. That's exactly what happened to me yesterday on the tennis court. So, yeah, I will emphasize the use of proper equipment when playing sports.
Yeah.
That's all. And the shoes I was wearing, I thought were good tennis shoes, but apparently not. A little more ankle support.
Loafers don't cut it, bro.
Yeah, Vans, loafers, flip-flops, and slippers.
Slippers.
Well, thanks, Skyler. We'll talk next week, and have a good weekend, brother.
All right, Chatty.
Aloha, everybody.
Aloha, mai. Have a good weekend.
Okay, guys.